Hello, and welcome to today's video on investing during an economic crisis. The current state of the global economy has been a source of concern for investors around the world. As we face economic uncertainty, many investors are wondering whether they should invest now or wait for the market to stabilize. In this video, we will discuss the pros and cons of investing during an economic crisis and provide some guidance on how to make an informed investment decision. Investing during an economic crisis. Pros and cons. The decision to invest during an economic crisis can be a daunting one. However, it is important to note that investing during a crisis can present unique opportunities that are not available during more stable economic times. Here are some pros and cons to consider when deciding whether to invest during an economic crisis. Potential for high returns. One of the biggest advantages of investing during an economic crisis is the potential for high returns. While investing in the stock market always involves some level of risk, investing during a crisis can present a unique opportunity to buy stocks at a lower price, with the potential for higher returns when the economy recovers. For example, during the 2008 financial crisis, the stock market dropped significantly, but those who invested during that time saw their investments grow significantly as the market recovered. Lower stock prices. During an economic crisis, many companies may see their stock prices drop significantly. This can present an opportunity for investors to buy stocks at a lower price than they would be able to during normal economic times. By purchasing stocks at a lower price, investors can benefit from the potential for price appreciation as the market recovers. Diversification. Another benefit of investing during an economic crisis is the opportunity to diversify one's portfolio. During a crisis, certain sectors of the economy may perform better than others. For example, during the COVID-19 pandemic, the tech sector and e-commerce companies saw significant growth, while other sectors, such as travel and hospitality, suffered. By diversifying one's investments across different sectors, investors can mitigate their risk and take advantage of different investment opportunities. Long-term gains. Investing during an economic crisis can also provide an opportunity for long-term gains. While the market may be volatile in the short term, investing in quality companies with strong fundamentals can lead to significant gains over the long term. By investing during a crisis and holding onto quality stocks, investors can benefit from the potential for long-term growth as the economy recovers. Bargain opportunities. Finally, investing during an economic crisis can present bargaining opportunities that may not be available during more stable economic times. For example, during the 2020 COVID-19 pandemic, many companies experienced significant drops in their stock prices, creating a unique opportunity for investors to buy quality stocks at a discount. By taking advantage of these opportunities, investors can position themselves for potential gains as the market recovers. Cons. High risk. One of the biggest drawbacks of investing during an economic crisis is the higher level of risk involved. As the market fluctuates and the economy remains uncertain, investors may experience significant losses if they invest in the wrong companies or sectors. Investing during a crisis requires a higher level of risk tolerance and a willingness to accept short-term losses in exchange for the potential for long-term gains. Uncertainty. During an economic crisis, there is a high level of uncertainty about the future of the economy, which can make it difficult for investors to make informed investment decisions. Without a clear understanding of how the crisis will impact different sectors of the economy, investors may struggle to identify quality investment opportunities. Timing. Timing is another key factor to consider when investing during an economic crisis. While investing early in a crisis may present opportunities to buy stocks at a lower price, it can also lead to significant losses if the market continues to decline. On the other hand, waiting too long to invest may mean missing out on potential gains as the market begins to recover. Volatility. Another drawback of investing during an economic crisis is the potential for volatility in the market. As the economy fluctuates and uncertainty remains high, investors may experience significant losses in the short term. This can be particularly challenging for those who are investing with limited financial resources. Limited resources. Finally, during an economic crisis, many investors may have limited financial resources, which can limit their ability to invest in the market. For example, during the COVID-19 pandemic, many people lost their jobs or experienced reduced income, which made it difficult for them to invest in the stock market. This can be particularly challenging for those who are just starting to invest or who have limited savings. Despite these drawbacks, investing during an economic crisis can still be a smart strategy for those who are willing to take on some risk. To maximize the benefits of investing during a crisis, it's important to take a strategic approach and consider the following factors. Quality companies. When investing during an economic crisis, it's important to focus on quality companies with strong fundamentals. This includes companies with a strong balance sheet, a track record of profitability, and a competitive advantage in their industry. By investing in quality companies, investors can mitigate their risk and position themselves for potential gains as the market recovers. Diversification. Diversification is key to mitigating risk when investing during an economic crisis. By investing in a variety of sectors and asset classes, investors can spread out their risk and take advantage of different investment opportunities. For example, in addition to investing in stocks, investors may also consider investing in bonds, real estate, or alternative assets like cryptocurrencies. Long-term perspective. When investing during an economic crisis, it's important to take a long-term perspective. While the market may be volatile in the short term, investing in quality companies with strong fundamentals can lead to significant gains over the long term. By focusing on long-term growth, investors can ride out short-term market fluctuations and position themselves for potential gains as the economy recovers. Risk management. Finally, risk management is critical when investing during an economic crisis. This includes setting clear investment goals, establishing a diversified portfolio, and setting limits on how much risk you are willing to take on. By managing risk effectively, investors can minimize their losses and position themselves for potential gains as the market recovers. In conclusion, investing during an economic crisis can be a smart strategy for those who are willing to take on some risk. While there are certainly drawbacks to investing during a crisis, including higher levels of risk and uncertainty, there are also potential benefits, including the potential for high returns and bargaining opportunities in the market. To maximize the benefits of investing during a crisis, it's important to take a strategic approach, focusing on quality companies, diversification, a long-term perspective, and effective risk management. By doing so, investors can position themselves for potential gains as the market recovers from an economic crisis. Thank you for watching this video on investing during an economic crisis. We hope that this information has been helpful to you as you consider your investment strategy. Remember to always do your own research and consult with a financial advisor before making any investment decisions. If you found this video helpful, please give it a thumbs up and consider subscribing to our channel for more informative content. Thank you again for watching, and we'll see you in the next video.